Hello, everyone. This is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team to reduce the potential for fraud, compliance fines, and just overall bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. You may already be sending pre-notes when vendors submit banking for an ACH payment method, or maybe you're thinking about doing that to comply with the upcoming Nacha fraud monitoring rule. Here's why pre-notes don't help to prevent fraud, and I don't recommend them for Nacha compliance. Keep listening. Welcome to episode 378. 3 reasons why I don't recommend ACH pre-notifications to avoid payment fraud or for Nacha fraud monitoring compliance. Now, most of you are probably familiar with Nacha. They are the governing body over the ACH network, where all our vendor payments, all our payroll payments, right? All ACHs here in the US, that's the network that they go through. Now, Nacha is trying to reduce, right, the fraud that has been increasing, and so they have a fraud monitoring rule that is coming out, and I do explain that in episode, I think it's 376. Yes, it's called the March 2026 deadline, Nacha rules impacting vendor payments. And it's actually 2 rules, but today I want to talk about the one where the Nacha fraud monitoring rule, where originators, and that is your company of ACH payments, you are required to have or implement risk-based processes and procedures reasonably intended to identify ACH entries initiated due to fraud. So your company is required to identify whether or not the ACHs that you guys are initiating by generating that pay file, right, for your vendor payments, that the banking information is not fraudulent. And so take a listen to that episode. I won't go deep into it here, but there are 2 deadline dates. One is March 20th, and that is with or for organizations that have an ACH origination volume of 6 million or more in 2023. But then everyone else has to comply by the second date, no matter what your volume is, and that is June 19th. And so, again, take a listen to that episode if you want to hear more about the fraud monitoring rule, and the second rule that's coming out the same day, March 20th, for everyone. All right, so we know that Nacha is worried about fraud. I am sure your company is also worried about fraud, and maybe you're already doing that ACH pre notification or pre note. So, what is it and what does it do? Well, a pre note is a $0 entry that goes through the ACH network to validate the vendor's routing number and bank account number prior to submitting the actual transaction. And so, for most, at least when I was a practitioner, it those banking details were pulled into the pay file, and that pay file went to the bank along with, right, the banking information for actual payments, but it was a $0 entry. And the purpose of this is that when your vendor's bank received the request, that $0 entry with the routing number and the bank account number, they were required to submit return codes to say if the account is closed, invalid, unable to locate, or even if the account holder is deceased. Now, the good news is that most accounting systems or ERPs have the functionality, right, to send pre-notifications. The other good news is that if the return code indicated that the account was valid and that any payment submitted would be successful, then that's great. That means that you don't have to worry about rework for unsuccessful ACHs that are returning. Now that's the good news. The bad news is that you do not receive any information related to the account holder's name. And this is the first reason why I don't recommend ACH pre-notifications to avoid payment fraud or for Nacha fraud monitoring compliance. So you don't know if the account holder's name matches the vendor name because you know that you send that in the pay file. Uh, the pay file automatically picks up the vendor's name along with their banking information, but there's no indication if the banks even checked the bank account holder name and whether it matched the vendor name that was sent in the pay file. So some banks will check to verify the vendor legal name and the bank account holder name matches. Some banks won't, but even if they do, they don't send an indicator back to say if there was a match or not. And so, yes, this is great to make sure that you don't have return payments and you don't have rework. However, it is not going to help you to identify fraud. And even with that, you're only sending up the vendor bank account name uh, or the vendor legal name to be checked against the vendor bank account name. There are other pieces of data that can be used to validate whether, right, your vendor owns that bank account in addition to vendor legal name. And so that can be tax ID, that can be their address, depending on the solution that you have or might be looking at for bank account ownership validation. There could be other factors too that they look at to verify that, it is your vendor's bank account and not a fraudulent bank account. And so for that reason, pre-notifications, it's great to make sure you're not going to get a return payment, but it is not so great to avoid fraud because you don't know if the vendor's information that you collected matches the information for that account. All right, so that was the first reason, and albeit that is a huge reason, but I do have two more. Now, the second reason is that it can cause payment delays. Those pre notifications have to be sent prior to the payment. And so, if you're trying to process a payment that needs to be that is due prior to, right, the receiving the return codes from the bank, then you're going to be late. But you know what? This one is not as critical, in my view, because you have the same problem with micro entries, which are, you may call them penny tests, where you have to send the banking details up, but this time with an amount that's less than $1. And you have to get your vendor involved to verify the amount. And I actually do recommend that as one of the ways that you can use to comply with the Nacha fraud monitoring rule. But unlike the micro entry where you get your vendor involved and you can ask them for a screenshot of the amount that also includes the name on the account, that is much better than just verifying that the routing number and bank account number combination would be a successful payment if you sent a payment through. So both of them have delays, but the pre-note has a delay that really doesn't give you any more information to determine that it's not fraudulent. Because remember, fraudulent accounts are real accounts too. All right. So the third and last reason that I do not recommend pre-notes for avoiding fraud or for complying with the NACHA fraud monitoring rule is because of non-US banks. Now, you can definitely process a non-US ACH transaction through the ACH network, and you can also include a pre-notification entry. The problem is while the use of the pre-note is supported, the concept of pre-notes is not supported in most countries around the world, and in most cases, you will not receive a response to your pre-note. So you're going to have another process for um, non-US ACH uh, payments that go through the ACH network. And speaking of having an alternate solution, I do have a webinar that is coming up. It's actually today. So if you're listening to this, the podcast is published or will be published on Thursday, March 12th at 6 a.m. And the webinar will be same day at 1 p.m. Eastern. But even if you missed it, that is fine. You can still sign up and watch the recording. Or if you're going to be busy, that's fine too. Still sign up and we'll send you the recording to watch. And so you can find out 3 ways to comply with the NACHA fraud monitoring rule that is upcoming. And again, depending on when you're listening to this, may already be in effect, but it is never too late to get into compliance. So I will leave a link to the webinar in the show notes. So thanks everyone. I hope you enjoyed the 378th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.